Hi traders, you are welcome to this video on the moving average ribbon indicator. This indicator is one of the most powerful tools to help you identify market trends and spot potential trade opportunities. Before we jump into the details, don't forget to like this video if you find it helpful, and make sure you subscribe to the channel so you never miss out on strategies that can improve your trading. Now let us get into it. First things first, let us talk about what the moving average ribbon indicator actually is. In essence, it is a visual tool that uses multiple moving averages on the same chart. As you can see, I already added this indicator to the chart. These moving averages are stacked together to form a ribbon, which gives you a clear view of market trends. Now, the ribbon shows you how price is interacting with multiple across multiple periods. All right, and it helps identify whether the market is in an uptrend, a downtrend, or sideways. But why do we use multiple moving averages, you might be asking? Well, by combining different periods of moving averages, we get a better sense of how the market is moving over time. A single moving average might give us a quick snapshot, but the moving average ribbon helps us see how trends develop across different time frames, making it a lot easier to spot trend reversals and momentum shifts. Now that you understand what the moving average ribbon indicator is, let us break down how it works. Essentially, the ribbon consists of several moving averages. You can see that it consists of four different moving averages: 20 SMA, 50 SMA, 100 SMA, and 200 SMA, although you can modify the period values. Now, the shorter period moving average the shorter period moving averages will react faster to price changes, while the longer period moving averages react more slowly, right? By watching how these moving averages spread apart or converge, you can get an idea of the strength of a trend. When all the moving averages are aligned, right? When all of them are aligned and the shorter term ones are above the longer term ones, it's often a sign that the market is in an uptrend, like in this particular example, right? Conversely, when the shorter term moving averages cross below the longer term moving averages, it could indicate that the market is starting to trend downwards, like you can see what happened here, right? Okay, now let us take a look at how you can set up the moving average ribbon indicator on your trading platform. I'm going to use the trading view for this example, but the process is very easy. Okay, the first step is to add the moving averages, right? Or you open your trading view platform, and then you come to indicators and you just search for the moving average ribbon, right? Add the moving average ribbon indicator. Meanwhile, if you can't find the indicator on other platforms, you can decide to manually create the ribbon yourself. Because basically what this ribbon moving average indicator is just a couple of indicators with different periods, right? So you can manually add different moving averages with different periods on your chart. For example, if you add the 20 SMA, add the 50 SMA, add the 100 SMA, add the 200 SMA, automatically you've got your ribbon moving average already, right? If you want to even add more moving averages, you can still do that, right? So you can customize the moving average, right, according to your trading strategy. Okay, you can also change the color of the moving averages, to make the lines more distinguishable. Now, as the price moves, you'll see the ribbon of moving averages dynamically change, right? So pay attention to how the ribbon expands and contracts. When the price is in a strong trend, the ribbon will often widen, okay? And the shorter period moving averages will be further from the longer period moving averages. But during periods of consolidation, like you can see exactly what happened here, during period of consolidation or choppy price action, the ribbon will tend to narrow or start entangling each other. Now that we've got the setup covered, let's talk about how to use the moving average ribbon indicator in your actual trading strategy. The first is identifying market trends, okay? The moving average ribbon indicator is perfect for identifying the direction of the market. If all the moving averages are aligned upward with the shorter periods above the longer ones, it's a clear sign of an uptrend. Conversely, if the shorter periods are below the longer ones, the market's likely in a downtrend. Okay, so in an uptrend, you'll be looking for buying opportunities when the ribbon is aligned upward. In a downtrend, you'll be looking for selling opportunities when the ribbon is aligned downwards. Okay, then the beauty of the moving average ribbon is that it also helps you spot trend reversals. Okay, so watch for times when the ribbon starts to flip. For instance, when the shorter period moving averages cross below the longer ones, right? When the shorter period moving averages cross below the longer ones, this could signal a potential trend reversal from an uptrend to a downtrend. Okay? If the ribbon changes direction, it might be time to exit your current position or prepare for a new trade in the opposite direction. Now, when the ribbon starts to widen, and the moving averages are spread out, that's an indication that momentum is strong. A narrow ribbon, on the other hand, suggests that the market is consolidating and there is less momentum. Okay, you can see how the ribbon widened around this place, showing that the momentum was strong. You can see how the strong buy pressure, you can see the strong bullish pressure, right? And the ribbons were widening around here. Okay, all right, so basically for strong momentum, if the ribbon is wide, just look for breakout opportunities in the direction of the trend. But if you have low momentum, that is if the ribbon is narrow, you have to be cautious about entering new trades, as the market might be range bound. Here are some quick tips to help you make the most out of the moving average ribbon indicator. Combining with other indicators. While the moving average ribbon is great for spotting trends, it's always a good idea to confirm your signals with other indicators like the RSI or MACD to filter out false signals. Also, use multiple time frames. Okay, check how the ribbon is behaving on different time frames. If you're trading on the 1 hour chart, see if the trend is aligned on the daily chart as well for stronger confirmation. Also, be patient for crossovers. Okay, do not rush into trades. Wait for the ribbon to show a clear trend shift before entering a position. All right, waiting for confirmation can save you from false breakouts or trend reversals. Now, to sum it up, the moving average ribbon indicator is an extremely powerful tool that helps you identify trends, confirm breakouts, and spot potential reversals. By using multiple moving averages, you get a better view of how price is behaving over different time frames, which makes your trading decisions much more reliable. Remember, just like with any indicator, it's important to use the moving average ribbon in conjunction with other tools and to always be mindful of the broader market context. If you found this video helpful, make sure to like and subscribe to the channel for more trading insights. Also, let me know in the comments if you've used the moving average ribbon before, or if you have any questions about how to apply it in your strategy. Thank you for watching, and I'll see you in the next video.